guys, welcome to my YouTube channel. On this YouTube channel, I bring you the most valuable Forex content. My focus is to bring you free content that you're most likely to pay for from any mentor. So if you are new to this YouTube channel, please like and subscribe and also hit the notification bell so that you can be notified when I upload a new video. Okay, on this video, we're gonna be talking about the market structure. I know you've seen it on many videos, you've heard many people talk about it, but what exactly is market structure? Well, the way I define it is understanding what that specific pair is doing, whether it's ranging or whether it's in a downtrend or whether it's in an uptrend. Now that would be the beginner's way of explaining it. But when we get more advanced with the market structure, we start looking at things like, is the market trending? Is it trending upwards within a downtrend? Or is it trending downwards within an uptrend? Now, those are the things we're going to be talking about in a later stage. Today, let's just focus on the basic things about the market structure. For example, let's say we have an uptrend. Okay, let's leave it like this. Okay, so this is an uptrend. It's a simple uptrend. Everyone can see it because as smart money concepts traders would say, okay, this was a break of structure. This was a break of structure. So since these are break of structures, breaking to the upside, we say it's it's an uptrend. And then as a trend line trader would say what, since we can draw a channel from these points going upwards, this is a clear uptrend. This is a clear uptrend. Okay, now let's dive deep into this small trend line that I drew here. Now if you look at this trend line, it's just a trend line. We don't know if this was on a 15 minutes time frame. We don't know what the 30 minutes time frame is saying, what the 1 hour time frame is saying. So this could be an uptrend in a downtrend, or it can be an uptrend within an uptrend. Now if this was to be in an uptrend, if this was to be in a downtrend, it would be something like this. This would be the corrective phase. It's possible for an uptrend to be the corrective phase of a downtrend if you change the time frame. For example, we could be having something like this on an H4, a downtrend, the corrective phase, and then a continuation of the downtrend, taking out this low. Now, if you look at this is a major downtrend and then a minor uptrend within the structure. So it's very important to know which trend are you within. Are you in an uptrend that is within an uptrend, or a downtrend within an uptrend? Okay, so on this structure, we are on the bigger time frame, we are trending downwards. On the higher time frame, on the bigger time frame, we are trending downwards. On the smaller time frame, we are trending upward. So it is very important to know that since you are in this uptrend is the correction phase of the bigger downtrend, it's very important to know when to take your buys. You can't keep on taking buys when you know that this is just a corrective phase of the bigger time frame. So where do you take your buys? Normally I prefer taking my buys on the first two lows. Now if the market continues to create something like this, if the market continues to create higher highs here, and then higher lows, higher highs. I no longer consider taking buys here. Wait, let me fix that. It continues to create higher highs, higher lows, higher highs. I no longer consider taking the buys here because I know that sooner or later the market is going to start dropping down and continue with the main trend. So I start looking for what? I start looking for buys here. I start looking for sales here on these levels here. I start looking for sales. Every opportunity that comes as a buy, I leave it because I know it has a higher chances of being a false buy signal, because I know that the market has done the correction phase, and others would prefer saying, okay, let's take the high and the low of the range all the way from here, marking this point and also that point, and say let's find the 50% of that point, which is between here, which is something in between here. And then after that we say we only look for buy opportunities. Since we notice the corrective phase and then we have a smaller uptrend within that corrective phase on a smaller time frame, we start looking for buys only on the first 50%. And once we cross the 50%, going upwards on this zone here, let me mark it for you. On this zone here, from here to there, we start looking for sales. And then on this zone from here to there, we start looking for those small buy scalps. So we want to buy the market, scalp it a little bit, go in and go out, and then wait for the long term sales that we're going to be having from this zone. It's only until when this thing comes a little bit here, it comes here, okay, and then it continues going up. So when it goes up like this, you know now the market has changed its direction, and it's gonna come back. And when it gets into this zone, we can start looking for the minor sells, and then when it gets to this zone, we start looking for the major buys, because now we can see the structure on the bigger time frame has changed. Now we are looking for the long-term buys. Now let's go to the charts and start looking for what I just explained. And what I like to do is I like to go to the bigger time frame, to the smaller time frame, and then zoom out. I like going to the smaller time frame and then zoom out, because now you get to see the major trend and also the minor trend all in one picture. For example, this is the major trend. Here is the major trend. We're in a downtrend. We're in a downtrend. This is the major trend. This is the major trend. But within this trend, we have what? Within this trend, we have minor trends. Okay, for example, let's just say we have this one here, starting all the way again. We have that small downward trend. So this was a downtrend within a downtrend, and then we started going a little bit up. That corrective phase is also a uptrend within a small within a downtrend, and then we started going down and then up again, down and then up again, down and then up. So we saw something like this. So remember guys, this is market structure. It's inconsiderate of whether you're trading SMC or whether you're trading trend lines or you're trading harmonic patterns. It's very important to know what market structure is, because no matter how good your strategy is, it will always give you false results if you don't know market structure, because there's no strategy with just the holy grail. You have to know when it works and when does it stop working. Okay, so we have a downtrend. Okay, here because you can see we had a downtrend within a downtrend and an uptrend within an uptrend. So let me just okay, let me change the thickness of that, and let's dive deep in. Let's zoom in. Now we said we have to consider the 50%. As you can see on this phase here, we would have went for these small buys here, this small buys here, and then let's just map out the whole range. The range is from here. Okay, what's going on? Okay, I don't know what's going on with my PC. Let's just hope it comes back. Okay, I don't know what's going on. Okay, it's back now. Let's say we have that range. This is our range. In our range, we mark the 50%. This here should be the 50%. Below here, when the market start pushing upwards, this is where we're gonna be looking for our buys. So if you dive deep in here, there's a small some sort of a flag happening to show that the price will start pushing up. So since this is within this 50%, we would have taken the buy here and then went up with it. And immediately when the price reaches this 50%, we stop considering the buys. Whatever buy opportunity we get, we ignore it, and then we start looking for sales. Here as an SMC trader, I would have, okay, this is an order block, liquidity here, then that was a perfect sell. And then we went again, created this leg. On this leg, we also have the 50% of this leg. Here's the 50% of that leg. Okay, this is the whole leg, and then here's the 50% of that leg. Here's the 50% of that leg. Okay, this here is just a faker. It's just because of some news happened. So we went up in the 50%. We start looking forward for buys. So as you can see, we went up, correction here. You enter depending on your strategy, but you can see there's some sort of a head and shoulder here if you're a trend line trader, but then here you enter and then you go up with it. And then in these zones, you don't consider your buys. You only enter when it's below the 50%. So from here to there, that's where you start considering your buys, your small scalps. And when we get around this area from here to there, that's when you start considering your big sells. As you can see here, we went down on a trend, we had a change of character. I'll make a video about change of character if you want to know what change of character is, and also leave a comment if you want to know what a change of character is in the link in the description. Okay, in the comment section, sorry about that. And then we went back up. Here we had an order block, and then we start shooting down. So you would have taken all this big move, and then here we just taken that small scalp. So that's how you analyze the market. So if you check, we still have, so that's how you see that we can have a downtrend within an uptrend, or an uptrend within a downtrend. Now if you look at this, this is a downtrend. If you check it on the 1 hour time frame, this is a downtrend. But if you look on the major time frame, on the major time frame, we had a break of structure here, and that is, if that's the break of structure, and then that means we are trending upwards. And then this was the last price of the market. Now if we put that here, if we put that here, as you can see, we haven't taken out this low here. This simply means, now if you look on a bigger time frame, maybe the 4 hour, you can see this is just the corrective phase of the market. Now this becomes the corrective phase of the market. This just becomes the corrective phase of the market. That just becomes the corrective phase of the market. It simply means we we were in a downtrend. If we make it as 1, okay, we were in a okay, wait, let me just do this. That simply means we were in a what? We were in a uptrend, retracement, now it simply means in the following week we might expect to see, in the following week or 2 weeks or 3, we might expect to see the market to continue pushing up, taking this high here. See, so in an uptrend, so we were in a downtrend within an uptrend on a bigger time frame. That's it for this video, guys. If you enjoyed this video, please leave a comment and a thumbs up, and if you haven't subscribed, please subscribe to help this channel grow.